Hello everybody and welcome back to our third and final video in our video series on beginner accounting concepts. From our journey in video 1, we looked at some of the basic definitions around the building blocks of accounting practice. So we looked at the definition of an asset, a liability, equity, and lastly, we looked at how they relate to each other in terms of the accounting equation. We then moved over to video 2, where we looked at the dynamics behind debits and credits. And I hope you remember ADLIC, which is the acronym to give you some guidance in terms of which side of an account increases or decreases in relation to your debits and credits. In today's video, we'll be looking at some of the practical examples around accounting practice, which is a little bit more on the calculation side versus the theoretical side, which we covered quite well in video 1 and 2. So joining me today is my colleague, Mr. Hussein Kuvadia, and through our very accountant-like spreadsheet, we will take you through some examples. So happy learning.
Hello, everyone. It's Hussein from video 2. So let's jump straight into this transactions we have for you. The following transactions took place in the business of Alex Traders. It says prepare the journal entries using the accounting equation format provided. So we have the accounting equation format here at the bottom, assets equal equity plus liabilities. Let's go to transaction number 1. The first one says Alex contributed 150,000 Rand as capital to the business. So let's ask ourselves, what is happening in this transaction? Alex gives some money to the business, so therefore bank will increase. So we'll debit bank under assets. Bank falls under assets. If you look at the definition of assets, bank falls under the definition of an asset. So we'll debit bank. Okay, and the amount will be 150,000 Rand. What account would we credit? Remember, for every debit entry, there must be a corresponding credit entry. So what account would we credit? Under equity, we would credit capital. So we'll credit the capital account because Alex is contributing money to the business. And what would the amount be? 150,000 Rand.
Okay, so moving on to transaction number 2, Alex purchased an office building for 100,000 Rand in cash. So if we look at the accounts that are being affected by this transaction, the first account would be cash, as we are spending money. Money is leaving our bank account to the value of 100,000 Rand. In return for that cash, we are obtaining an office building. And from our lecture 1, we know that the office building is classified as an asset because there will be future economic benefits in the form of perhaps staff sitting in the building, running their operations from there, running their various office-related activities from there. And to put that down on paper, we start off by saying, what is increasing? Our asset, the office building, is increasing. So we debit office building, value of 100,000 Rand. And corresponding to that is a decrease in our cash, our bank balance, also to the value of 100,000 Rand. So within the context of the accounting equation, we'll see that it balances. On the asset side, we have a debit, meaning an increase of 100,000, and a corresponding credit as a decrease. So 0 on the assets, 0 on equity, 0 on liabilities, and hence our accounting equation balances.
Okay, let's go on to transaction number 3. The business obtained a long-term loan from First Bank to the value of 300,000 Rand. So let's ask ourselves, what is happening in this transaction? We went to the bank, we obtained a loan. So therefore, money will be coming into our bank account, but we'll be owing someone the money. So if money is coming into our bank account, our assets are increasing, bank is increasing, we're going to debit bank with 300,000 Rand. And what else is happening in this transaction? We went to the bank and we obtained a loan. Loan falls under the definition of a liability, as you would know from video number 1. So what's happening? Loan is increasing, liabilities increase on the credit side. So we'll credit our liabilities, which will be loan. And the amount would be 300,000 Rand. Once again, our accounting equation works out. Assets are 300,000 Rand. Equity plus liabilities is also 300,000 Rand.
Okay, so Hussein, I hope you don't mind, but my OCD tendencies are kicking in and I just want to change that. to a capital letter. That's how we work as accountants. Attention to detail. All right. So let's look at transaction number 4. Purchased 5 bottles of shampoo for resale at 200 Rand each on credit. So what's happening here? We are buying inventory for resale. So this is where the business now engages in its normal everyday activities. So let's identify which accounts are being affected. So number 1, we are purchasing inventory. Inventory, we know, is an asset because we will derive future economic benefits in the form of selling that inventory at a profit. Corresponding to that, we have a credit purchase, meaning that we now have an obligation to pay that money at some stage in the future. So we are not paying that money today, we are paying at some stage in the future, and that is the result of a credit sale. So let's look at how we would record this transaction. So for starters, we would debit inventories because we are increasing our stockpile. And the amount that we increase by is 1,000 Rand. So it's 5 bottles times 200 Rand each. The corresponding obligation or liability is increasing in the form of creditors. And the amount that we will owe them in the future, or well, the amount that we will pay them in the future is 1,000 Rand. All right.
Hey, thank you, Zafir. So let's go on to number 5. You paid electricity expenses for the month to the value of 500 Rand. So what's happening over here? You pay your expenses for the month. So bank is decreasing. Bank is an asset. Asset decreases on the credit side. So we'll credit bank and the amount will be 500 Rand. Hey, what else is happening? You are paying your electricity account. Now, where does electricity fall under? It's an expense. Expenses fall under equity. The question we've got to ask ourselves is this expense making me richer or poorer? What effect does the expense have on my equity? It currently makes me poorer, so therefore it decreases my equity. Equity decreases on the debit side. So I'll debit my equity and the account will be electricity. Okay, and the amount will be 500 Rand. Once again, your accounting equation works out. Assets is 500, equity plus liabilities equals to 500 Rand.
Okay, so we get to our last transaction where we sold 4 bottles of shampoo, which we purchased in transaction number 4 at 300 Rand each for cash. All right, so what we are effectively doing here is engaging in our normal sales transactions, the normal everyday activities, okay? So from the 5 bottles that we previously bought, we are now selling 4 of them. So 2 things are happening. Number 1, a sales transaction is taking place. So we are receiving money for the bottles of shampoo that were sold. So 4 times 300, we start off with the amount, 1,200. Okay, we debit our bank because we are receiving more money. Bank increases on the debit side. And from an equity perspective, we ask ourselves, as we did with the previous example, are we getting richer or are we getting poorer? So because we are selling, we are getting richer. So equity is increasing. And we know that equity increases on the credit side. And the account that is increasing equity is sales to the value of 1,200 Rand. We then have to deal with the inventory leg of the transaction. So previously we purchased inventory and we increased our inventory because of the inventory that we had on hand. We now no longer have that inventory on hand because it is sold. So we need to credit inventory of 4 bottles, so 200 times 4, and reflect that as cost of sales. We debit. Also 800 Rand. So if we look closely at what's happening in the last transaction, we sold goods to the value of 1,200 Rand. Those goods cost us 800 Rand, and the net effect is a profit of 400 Rand. So a net increase in equity of 400 Rand. All right, so that brings us to the end of the video. We hope that you enjoyed going on this journey of accounting with us. We hope to provide you with more videos later on dealing with more complex issues. But for now, practice, 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 and all the best. See you soon.
Hey guys, thanks, good luck, and I hope you enjoyed our series of videos.